Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Welcome back to the podcast Become Sensible. What if I tell you the difference between closing this year strong and starting the new year feeling already like behind? It depends on the 5 unsexy things that many of us business owners avoid to do. This episode is for the founder and business owners who mean to get it done and get to it during the year, but you didn't have a chance or because many reasons you haven't touch it yet. This is the wonderful time to make sure that you close the year right and then start the new year in the right note. So my name is Fiona. I am the CPA and the host of the podcast Become Sensible. Today we are breaking down into 5 financial and tax moves you need to make before the year ends. And the one actually help you to protect your profit and your peace of mind and prepare for the next day in your business. So let's sit down and talk about this, even though it look like a little bit unsexy, but let's just always go with the financial thing. It's look like very dry thing, but regardless, if we don't control and manage our business financial, and I think like in general financial situation, we always have a stress that running in the background of our minds. So the more and the better you in the manage and control. And I think in life and in business too, the more that we face this and we tackle it and we solve one problem at a time, then eventually it's not going to be like a backlog in our mind and it's give us like the freedom space in our mind ability to grow and scale the business too. So it's like financial tax, and tax is like a fundamental of the business. And I always say, like in the business, we only have a 4 5 areas that is foundation of the business. Number one is a great product or service that we promise to solve a problem for clients or potential customer. Number two is our marketing and sales, how our client, how our potential customer find out about us, how we approach the markets. Number three is operation. That is like including like production of the products if you're in the product base, and or like how you manage your operational to deliver the work for client if you in service space. And then number four is financial and tax and manage your resource together. And finally, I think that is whether it's human resources, like managing the human capital of the business. And all of this, you can go down into like very detailed in departments as you scale the business. So today we talk about like how to manage not a 5 unsexy thing about managing about financial and tax, but it actually build a foundation for you to close the year well and then start the new year in the right note. Number one is clean up your accounting and bookkeeping properly. And I mean, it's really need to be properly because there's a ton of the business owners and founder and company have a bookkeeping or like accountant to take care of their financial. But because the book is not recorded in proper in accounting way, so you miss a ton of eligible like deduction or expense. Like last week, we have a new clients that basically pay extra $50,000 in tax. Really, a real number is more than 50,000, but we can route out it's like $50,000. And the only reason is her previous CPA didn't have a proper like bookkeeping at all. The company run like millions of dollars in revenue, but keep all the records is on spreadsheets, and it's missed her like I think like around $200,000 to $300,000 in spend and deduction. That make her business basically get a profit, a sizable profit that make her end up by extra like $50,000 in tax. I know this is very important for us to try the revenue because I run the business too. So I understand that it's not like easy. We understand the basic, everything that we need to get it done for our business. But of course, like how much hours that we have during the days, we all have a 24 hours. So there's some part of our business is lack up. But this quarter, the last 2 months of the year is the perfect time. That anything that foundation of your business that wasn't taken care well during the year. It need to be catch up at this time. And one of them is like whether your accounting records is booked correctly. Because if not, then like by January, by February, you face with the situation of tax. And I think this I see it all the time. That is people that who didn't have accounting and records in the right place. They end up pay like extra $50,000 or $100,000 in tax for very unreasonable thing. So make sure that you have the time to sit down with your bookkeeper to understand, or like your accountant, your CPA, to understand, okay, what is going on in your business? What is all the spend? Where's all spend was there? Was all of them is reconciled? And what is actually telling in your business financial? So basically, it's like you need three report. That's number one is profit and loss. The number two is balance sheet. Number three is bank reconciliation. Make sure that if you have a five bank account and credit cards, they all included and it was reconciled. One, all of these, number one, your goal need to be accurate first. Before anything like fancy about like, okay, you can use this tax strategy and other tax strategy. But if your records was not correct first and not including all of eligible deduction and expense that you spend during the year, you basically lose the money on the table before you can say anything complicated about tax strategy. So number one, the record needs to be correct. And the only way that you know is correct because you read the profit and loss to see like whether all this number makes sense in your experience of grow the business. Number two is whether everything will include it. That's why you need to run bank reconciliation to make sure that they actually reconcile all the bank section. And I tell you this, one of very common at the CPA that we see on the new client coming in with us is their payroll records never be correct. Like for any reason, the bookkeeper doesn't have the skill to understand that their total payroll costs of the company need to match with the W-2 and W-3 unless the company have a complex employee benefits like health insurance plan and all of that. The number may be slightly off a little bit, but it needs to be almost correct. If it's not correct, then there's something going on wrong in the way that they book the number. So make sure that you sit down with the people on your accounting team or your CPA, understand the number, whether they do is correct is number one. Number two, whether you understand it and it makes sense in terms of finance. So that's a number one, clean up your book properly. And then the next one is review your estimated tax. I think like one of the things people always do is in January, they set up the estimated tax with their accountant like in January 15. And then they think that this run for the whole entire year. So the rule with estimated tax is what? You need to pay 100% of total your tax due last year, or you need to pay 80% of your current year tax due. So if this is 100% like total last year, your tax due were like 35,000. If this year you basically change and get more profits and all of that, you need to be at least to pay 100% of 35,000 in estimated tax this year. But if not, then you need to pay, like for example, this year is 50,000 in tax bill, then you need to pay like totally 80% of that 50,000, which is $40,000 in tax, estimated tax. So don't set it and forget, you should have a tax planning section with your accountant to make sure that you prepare for like the total estimated tax due is correct. And I think like recently, I think all the states and the IS, all the agency, they are trying to do like more very strictly on the estimated tax penalty. And so make sure that you need to take care of this part, because if you miss it, you can have like $100, a couple $100 to thousand of dollars in estimated tax penalty. So this quarter is like the last 2 months of the year. Is very important to have a tax planning and estimated tax done correctly. Number three is spend intentionally. And this is coming down to the tax planning. So there's a ton of people, like I see on the social media, people normally labels, oh, if I spend, I can take the deduction, or like the government give me to write it up. But like any spending in, and this is like correlated to your tax planning. This means that tax planning is move the money that you, instead of like pay for the government in tax bill, toward like doing something else. Maybe that investment, maybe that is retirement, maybe that is the reinvest in your business. So any spending in the business, you need to serve three purpose. Number one, that is whether that will have you to like save the money in terms of tax. Number two, whether that is help you to grow the business, or is it will strengthen your brand recognition. And if it's not these three, other, of course, like, or other visit spend is basic that you need to cover every single thing. Like I see like many people, like at the end of the year, they just urgently spend a ton of money on random thing because they want to take the deduction. This is why tax planning coming in the right way will have you to plan for your saving and your spending at the year end in the right way. Otherwise, you just come out and buy random thing. Number four, fund your business future. And you as the business owners or your team, they need to think about retirement account too. That is, people normally say retirement account is like solo 401k, or is it 401k, or is it SEP IIA, whatever fit to your structure. You need to sit down with your accountant, with your CPA, with your tax people to see which option actually give you the better in terms of tax saving. And people will say like normally, okay, it just save me like $5,000 in tax. That is a lot of money. If you think about it, if you save $5,000 in tax and you make that contribution, that amount 5,000 for the next 30 years with compound interest, that will come up with like $100,000. And so that's just why today's the amount of money is 5,000, but like in the next 30 years, it's a sizable number. So any of your accountant that couldn't or cannot sit down with you to give you some option and scenario in terms of, okay, if I contribute for solo 401k, if I contribute for 401k, if I contribute for SEP IA, which option is give us the scenario and the result and the safe in terms of tax? If your accountant cannot do that, I would suggest that you need to change accountant, because this is the basic thing that they need to do for you, because otherwise you will end up to overpaying in tax all the time. And the money that you lose is not only the money that you lose today, that is the money that come out that you lose in the next 20 to 30 years. Number five, that is come back to review your profits and prepare the budgets for 2026. So people normally don't actually have a conversation, sit down with their accountant or CFO or CPA to actually have a conversation about what actually going on with their business financial. For us, we do it every single month with our clients, and we sit down, we go through line by line on their financial report, and we explain what is going on. We have a KPI for them, but also we sit down to have the budgets and the plan into the future. So if you don't understand what is going on in current in your financial situation, whether your profit margins is really low, I basically have a clients that make $3 million in revenue per year, but their profit margins is like 7%. That is actually very low for the industry that they are in. But of course, like other industry, like product based, the margins is really low, like 5% or 2%. But some industry normally at least they need to have around like 15%. But their industry like and the revenue is like 3 million. This means that it's over the break even. His industry is doesn't need to have a lot like capital expenditures. Like if you in the industry that need to have a real investment in capital expenditure, so that can be understandable with some industry. But if the benchmark in a company that have around like 15 to 20% in profit margin and your company run at 7% or 5%, that's just there's something going on with your business model or structuring. And then you need to take a look at it really detailed. And because this is the last 2 months of the year, you should have the plan for 2026, whether that is your budgets, what is your growth strategy, and how it look like. All of these strategy that you have need to like play into your planning. So one of the things that we always do for client, and I think is very helpful for any business owners, is run at least 3 scenarios. You have the base case, which is like everything look normal and the growth is normal, everything line by line look like. And then you need to run the most optimistic case that is like the business like grow 30% increase in revenue and then the profits is increase like 30%, whatever that is the high scenarios case. And then you have the worst scenario case, so you know if this deal, these projects, or this launch doesn't work well, what is the worst scenario that your business will have in terms of the number? So then you have a game plan for the business in the new year. I think that is 5 things that you need to make sure that you take a look and take the actions and take the control before the year ends. And so, in a short summary, is this: number one is clean your books. Number two is check your estimated tax. Number three is spend with your purpose. Number four is fund your future. And these three is connecting to with your tax plannings. And finally is review your financial report and make sure that you prepare the budgets and the game plan for the new year. If one give you back something money can, that is clarity. And clarity is the real return on your investment when you run in your business like a CEO. I know it's shipping to from like sole proprietor until become a CEO is mean run the company and have the people on the team and manage multiple things is actually quite challenging and it's hard. It's not easy at all because it requires a lot of you in many different domains. But I want to make sure and emphasize that the part of financial and tax is actually very important. In my experience with hundred of clients and small business owners over the years, I see that the people who actually control and manage and understand their business financial as a necessary normally will doing well in the business because the reality is it cannot do one time per year, check and done. You need to be like very proactive and ongoing meeting and understanding and planning and change strategy. And all of this is based on a backup data. Of course, we all listen to our gut feeling, but our decision is backed up with the data, with the information, and with what is really running in the business, then it happens to move the business better and the strategy is better. So financial peace is not something glamorous or is fun, but it's actually very powerful. So I hope that this episode will help you manage your business financial at the year end. And I thank you so much for your time today. If the episode is helpful for you, remember to share it and let us know what we can do to help you with. Thank you so much for your time and looking forward to see you in the next couple episodes.